From MF Global to stopping speculation, our guest host for the next hour has been making a lot of headlines. Joining us for the next 60 minutes, 58 minutes. Oh no, now 57. Bart Chilton, Commissioner of the Commodities Futures Trading Commission and a frequent guest, and you're in studio here. What were you back on the East Coast for?
Doing a talk with some people and doing this and meeting with our staff in New York. We have offices in New York, Chicago, obviously, and Kansas City and D.C. So we try to get around all.
Wherever there's commodities trading, I guess you need an office. All right. I can go back years, and we've had the same conversation about speculators, and we had one just about. When was the last time?
Maybe a couple weeks ago, yeah.
We just had Dan Dicker on. He doesn't want any fast money in commodities at all. He doesn't want any index funds.
Well, you don't have any markets if you don't have people in them. You got to have the speculators. It's a two-way street. The question is there a balance? And I understand the concerns that people have about some of the index funds, Joe, in that. They're fairly static. They can be fairly price insensitive. So if you look at managed money, which includes more than just index funds, last month we had of the managed money, these guys that I call massive passives, 85% of them were long. So that does create some sort of pressure in the market, and that's an issue that we've been trying to deal with through position limits and other things.
Well, here's one thing that went. A lot of people talked about this, and that was the first time we ran up to 150. The stock market had been static for a long time, so a lot of these pools of money were chasing return somewhere else.
Absolutely.
Did it actually happen that money managers, that their desire to help their clients make money caused all of us to pay $4.50 a gallon for gas?
Absolutely.
That really happened.
No,
it didn't happen.
No. But that's
what people say, though. That these global markets suddenly were that the tail was wagging the dog.
Well, everybody likes to make it black or white. It's one thing or another. And as you talk about all the time, I mean, oil is a global commodity, and it's not just one thing. And even if you talk with really smart people at the exchanges, they'll tell you that. They push prices a little bit further than they normally would go when they're getting into the markets. And between 2005 and 2008, we saw $200 billion in this managed money come into markets because they were looking for other opportunities. And that's fine.
It was working. Nothing else working.
Yeah, right.
Why are you arguing with yourself then right now? Because that's a point that I would make, that it has nothing to do with it, that oil's going to go where it's going to go based on supply and demand.
No, I didn't. I said.
But now you want to make sure
that
how many contracts you're going to be allowed to own now? You want to cap the number of contracts anyone can own now, right?
At roughly 10% of a market is our proposal. And as we talked about before, that's after getting 10,000 comments, and that's actually based upon some of the standards that they have in the spot month at CME, and they had it for 20 years on agricultural contracts. So all we're saying is put this into, and we're not just saying it, the law tells us to do this, go ahead and have it into the energy markets, have it into the metals markets. So I think it's actually a fairly high standard. I mean, I don't know who needs more than 10% of a market.
Can you speculate on how much of a barrel of crude is due to speculatory money?
Well, I can't because you wouldn't want me doing it. It'd be dangerous. But based upon what Goldman Sachs researchers say, if you have a Civic, you're paying $7 more every time you fill up as a result of speculation. Now that's their numbers. If you have an Explorer, it's $10, and if you have an F-150,
for you,
$14.
What's a helicopter?
For me, it's very expensive.
Helicopters are very expensive.
Okay, but what is the real solution then?
It's two things, Andrew. One is to have a reasonable limit. Again, do people really need more than 10% of a market? And then the second thing is there something that you should do with regard to a class of speculators? And I don't have the answer to it.
What do you mean by that?
Well, there's managed money.
Right.
So if Joe has 15% of a market, you might agree, well, Joe shouldn't have it. Joe can only have 10. But whether or not all of you are managed money and you all have 10% and that equals 30% and you're all doing the same thing, is that something we should be concerned about And so for me, it's definitely an area of inquiry and something that I'm interested in, but I don't want to go overboard and say that you can't invest in these markets, and I don't want to dry up liquidity. So as you talk about a lot, it's really a balance in trying to figure out the right thing. I think we got the right balance.
You love
Do you feel like you need stronger powers, more enforcement powers?
We have called for, the president called for recently additional fines and penalties on manipulation. And I'm totally supportive of that. One of the weird things, Mandy, in the law is right now, it's really unclear in some people's minds whether or not you are fined for every instance, every time you would make a trade, for example, or every day you're out of compliance, or whether or not it's just a pattern. And so what the president said, and what I agree with, I've been saying this too for a long time, is that we need to essentially ensure that it's every violation. We can't have manipulation or pushing these markets around, that the fines are just really a price of doing business. They need to mean something. And we've had some really good cases recently, but we're working on more even.
What?
I love when you said something about, what did you say on our air about MF Global? You went off.
I said a lot of stuff about MF Global.
I think you basically said that there was malfeasance or something, didn't you? Whatever happened with the...
Well, look, I mean, something happened with the money, and it wasn't, it's not appropriate. Something went drastically wrong. I mean, it was a slap to the face for us.
You've seen a lot of the material, meaning the emails, the back and forth, pieces of this investigation. John Corzine, responsible, not responsible?
Well, first of all, you know, I'm commissioner. I'm not an investigator. I'm not out there.
We want you to say something again that'll be, you know, circulated.
No, I'm just curious. You've seen this. You've at least seen the same stuff that I've seen, that we've all seen in the papers. But I'm curious. I imagine you might have seen a little bit more.
Yeah, I've seen a little bit more, but I can't talk about that part of what we're doing. I can't talk about.
Come on, just whisper
Can you talk
to
about
us.
where your investigation of the CME is sitting in terms of whether or not they did enough to protect customer funds before MF Global fell?
Well, the CME has acknowledged in a New York Times article a while back that we were working with them, looking into this, and so I'm not going to say anything. The agency didn't say anything about that. All I'll say is, Mandy, everything's on the table. We're not going to leave any stone unturned.
Okay, different question. Yeah. Could MF Global happen again? Today.
I wouldn't want to say never, Andrew, but we've got a lot more systems in place than we did even then. We immediately went out there. There's 126 Futures Commission merchants. These are the guys in the futures world that are like the dealer brokers in the securities world. 126. We went out immediately and did a review of the top 70 of those, and everything looks good. One of the very small little silver linings in this whole MF Global debacle is that I think firms out there said, let's make sure we're abiding by the law, and customer money, which is supposed to be sacrosanct, is there, not just at the end of the day, not just one time a day, all the time, 24/7, 365.
So you can categorically say that in terms of preventing another catastrophic loss of money, we are safer today
100%.
than we were then.
100% safer, Mandy. Now, we still have more things to do. I want these things, for example, when you have the money, maybe if you're MF Global or a firm like that, you've got your money in a bunch of different bank accounts. There's no reason why every day all the banks can't just wire into a place and electronically, I mean, you're talking about the disruptors and all the technology that exists out there. We know that the money's there 100% of the time. That needs to happen. I also think that we should have an insurance fund for when somebody does violate the law and the money goes away. The trustee Giddens mentioned that the other day in the Senate Banking Committee, and it's something we're working on.
Right, you've been advocating that for months, right?
Bart, we got to slip in a break. We're going to obviously continue this conversation throughout the hour.